Hello, good evening, and a very warm welcome to the next session of Powerhouse Series BFSI. It has been long since we connected on this platform. Last week we did only one session on insurance, and after that there wasn't any session. But we're back. There were some little hiccups, but they have been covered now. And today we are live with another trainer and with another topic. Today with us is Mr. Tahir Sataj. He is a senior FCCA member, and also he is the vice chair of the MNP of Pakistan. Along with that, Mr. Tahir serves as the wing head in the National Bank of Pakistan. And today, the topic that he will be covering with us would be accounting for financial services. So without any further ado, I'll hand over to Mr. Tahir to formally kick off the session. And if you guys have any questions, please do type in the chat box, and we'll take on your questions once we have covered some portion of the presentation. So over to you, Tahir sir. Good luck. Sorry guys, I believe Tahir is facing a disconnection right now. Let me just check with him.
फिरोज में आपको सुननी
I think Mr. Tahir is back with us.
Yes, hello.
Yes, Tahir sir.
Am I audible?
Yes, we can hear you.
Okay, thank you. Firoz, shall I start?
Yes, yes, you may.
Are you done with the introduction?
Yes, I'm done with the intro. I think you missed most part of it, but I have given a short intro about you, that you are the MNP chair and a senior FCCA working in the National Bank of Pakistan. You may continue on that note.
Okay, thank you. Thank you so much, Firoz. Assalamu alaikum, everyone. Let me introduce myself quickly so that we can start the session formally. I'm Tahir Sataj. I'm a fellow member of ACCA, fellow member of ICAP, and I've also done SIMA. And I'm working as wing head State Bank Regulatory Reporting Department and Fixed Asset Department in National Bank. And we are today I'm going to take your BFSI session on accounting for financial services. Actually, let's start this with a very basic thing. Today we have to talk about the accounting side. So I'm not going to give you a very confusing thing or confusing thing so that you can, I don't want you all to take some complex things. So let's start with the very basic thing. You all have seen this kind of balance sheet and profit and loss account throughout in your ACCA studies, and other than banking background, right? Like if you can see this, it's a simple format of profit and loss account where we can have sales with us, where we can have cost of sales, and where we have a gross profit, right? And you can see there are a number of expenses as well, with sales and marketing expense, admin expense, other operating expense, and there is another thing of other income which we have, which we should add in this, and after that we can reduce, we can deduct the finance cost, and then we can then we can arrive at profit before taxation. And after that we deduct the amount of taxation here, and then we can arrive at the profit after tax. So this is a simple form of a profit and loss account, right? And if you look at the balance sheet side, uh, again, it's a simple thing. Then we started with the non-current asset sides, right? And then after that, we can have a couple of current assets with us. Like in non-current asset side, we all know that we have property, we all have investments, and so on, right? And then in current asset, we can have debtors, creditors, we can have debtors, inventories, bank balances, and any other kind of account receivable, right? And after that, we can have equity of the company with the reserves. And then there's a non-current liability portion, and we can have the current liability portion. This is a very basic format of the balance sheet, that of which we can also call that statement of financial position that we can see here, right? But uh, the financial statement of banks are a bit different, right? And uh, I'll take I'll ask you all to please concentrate on the balance sheet of the banking sector, because this is the most complex one, and the one which we should understand, right, uh, before anything else. So let me share with you the balance sheet of the banking company, which is in accordance with the second schedule of Banking Companies Ordinance 1962. And this format is actually shared by State Bank of Pakistan back in, I believe, 2018 or 2017 somewhere. So if we are going to take the look of the balance sheet of profit and loss account, so you can see that this format is starting with the asset side, right? And if you look at the asset side, so you can see that cash is on the top, right? And if you look at the cash side, so because one of the major line item of banking is cash, right? Because the commodity that they are dealing is investment, advances, and cash, right? Cash includes, well, we are going to discuss the detail as well, right? When we will go on to the notes to the accounts, right? But let me give you an overall idea that what we can include in cash. Cash includes your cash in hand, cash includes your cash with cash that you are going to maintain in terms of regulatory requirement with State Bank of Pakistan. If there is any regulatory requirement of your overseas branches, and if there is a regulatory requirement there of their regulatory authority, then you have to maintain that cash as well, right? And by the way, in cash and balance with treasury bank, they also have a price bond with us. Well, previously price bond was part of the other asset, but now they have included price bond in cash and balance with treasury bank. Then we can have balance with treasury bank, balance with other bank, right? That balance with other bank is basically there you can have your current account and placement accounts with you, and you can put them here, right? And your nostro balances can be included here, right? uh, Nostros are basically the account that you are keeping in your book on behalf of your overseas branches and overseas settlement accounts, basically, right? Then we can have lending. There are multiple lendings line items, like for example, we can have call borrowing, we can have reverse repos, right? And so there are a number of couple of items which we are going, the detail of which we will be discussing in the notes to the accounts, right? Then we can have investment into, this is one of the major line item of any banking industry book, because number of banks are now keeping their investment in terms of T-bills, PIBs. You must have heard about T-bills and PIBs. So what is T-bills and PIBs? T-bills and PIBs are basically the government issued bonds in which all the banks can apply and they can purchase that document. And definitely there is a yield that the banking companies are earning on that, right? Well, we can have investment includes your share capital, investment includes listed and unlisted share capital, investment include your term finance certificate, that is TFCs. They can also include your sukuk, participation term certificates. They can have any investment out of Pakistan as well. Like there are many banks in which they are keeping GOP foreign currency bonds, and they can have foreign government securities. They can have multiple line items they can include. And not only that, investment also includes any investment that your company or your banking company is doing in any, or they have done in any, for example, subsidiary or associate or joint venture. So if they have that kind of investment, then that also will be part of your investments, right? Then we can have advances. Well, what is advances? Basically the loans, the loan book of any banking company is included in advances, right? And that includes your long-term financing, your short-term financing, your bills. You see, so there are a couple of I mean, all the banking products, all the banking company products of loan should be included in this advances. Then we can have fixed asset. Well, fixed asset includes all the capital item, capital fixed assets in this line item. And then we can have intangible assets as well. Like for example, if a banking company has purchased any kind of a software, if they are having any kind of special rights for anything, like for example, any software, anything, like for example, right? So they can include that thing here, right? Then we can have deferred tax asset. Well, we can have deferred tax asset and we can also have deferred tax liability here. So if we are going to prepare the financial statement, so we have to show the deferred tax at one point. I mean, either it could be a deferred tax asset or either it could be a deferred tax liability. We are not supposed to show both the things, okay? And then we can have all the other assets. It includes the markup receivable from your borrowers and from your from your loans and advances and your borrowing, right? So that other asset include all these, and it can also have your income tax refunds, advance tax, stationery. There's and number of items, right? So we will see it when we will come on to the note side, right? Then there's a balance sheet. Then there's a liability side in which we can have the first line item is bills payable, and bills payable includes all the inland bills, all the foreign bills. You see, so there are couple of bills that we can include here. What are bills? Bills are basically the trade transactions, right? Against trade transaction, for example, if you are paying your on behalf of your customer in a trade transaction, if you have opened any LC and you have paid the next bank on behalf of your customer, so you are actually creating a liability in your book, and you have to pay that amount to your corresponding bank, so that you can have this kind of a line item here. So that actually this transaction of LC creates this kind of transaction creates a liability on the bank. So bank has to show this thing on the face of the balance sheet. Then we can have borrowing, right? It has all the repo transaction here, and there are a number of line items in this borrowing, but the major line item is repo borrowing. Then we can have deposits. Deposits are the major line item of the balance sheet, because you see what banks are doing. Banks are taking deposits from the customers. It could be a customer, it could be any banking company, right? And they are lending it to their, I mean, their customers in the form of advances, and they are also doing their investments as well, right? So this is one of the major source of the amount that the banking company is obtaining. Then we can have lease liability. If you have any assets on lease, so you can show the liability side here. Then we can have subordinated debt. If you have any subordinated debt, then you can use it, right? And then we can have deferred tax liability. We have already discussed that thing here. And then we can have other liabilities. So the markup payable to all the customers or all the depositors, I must say, all the depositors should be shown here, right? So if you have any kind of markup payable on borrowing, markup payable on deposit to depositor holder, you can show it here, right? So these are all the one of the major, I mean, I have given you an overview of the balance sheet of the banking company, right? Then we can have the share capital with us, and it includes the unpaid profit of the bank as well. And it also has, just a minute, let me tell you one thing. It also has your statutory reserves as well, right? Statutory reserves are basically the reserves compulsorily required to be kept by the banking company, right? Of then we can have our surplus on revenue fixed asset or any kind of asset, and annual profit is separately shown here, right? And then the banking company is also supposed to show the contingencies and commitment here as well, right? Okay, now let's move on to the profit and loss side. I hope I'm making you all understand what's going on. If you have any question, you can, well, there will be a question answer Q&A session at the end of the session. But if you have anything that you guys really want to ask, then you feel free to contact me, and you can put your questions here, right? Okay. Well, this is the profit and loss account of the banking company, right? Sorry, this one. Well, bank do not have any kind of a commodity. Their cash is the only commodity, right? So they lend their money to their deposit, to their customers, and they earn interest on it. So interest earned is the major source of revenue for any bank, right? It also includes the investment side as well, right? Because definitely we are keeping the investments as well. So investments, there's a return that we are also getting, because we, for example, the banks, if they are doing any kind of investment in T-bill, PIBs, so definitely they must be earning the interest on that, right? And if the if they are getting any other kind of interest, so I mean on Sukuk, on TFCs, so they can earn on that, because they are bonds and their debts. They earn their the banking company earn interest on that as well, right? And definitely you have to deduct your expenses that you are going to pay, or that you are paying to your borrower and deposit holder, right? So we have to deduct that thing as well. So this is called NII, that is net interest income, right? So interest earned less interest expense is the NII. This is also the same gross profit margin earned by any manufacturing company, right? So you can see that this is the core interest income, right? But other than core interest income, there is one of the major line item of the banking industry at the moment is the non-markup income as well, right? and they can, because banks are involved in earning the commission income as well, right? They are doing any kind of arrangements. They are into so many transactions like advisory fees and something like that. So they are actually charging their fees as well, right? And for example, commission income. Now, what is commission income? For example, if you are a dealer in, for example, you are doing any kind of a shares transaction, and you are doing this, you are earning a commission on that because there is a deal between the two parties, and you are one of the one because of whom you are doing this kind of a transaction. So you are charging a commission on that, right? And like for example, National Bank is one of the beneficiary, or one of the bank from which those who are paying pensions to the pensioners, so they are charging the commission on that, right? So commission is one of the major line item of any banking company. And we can also, the treasury function is one of the one who is actually generating this kind of income as well. Then we can have dividend income. Definitely you have earned, you have invested, the banking company has invested lots of shares, so they must be earning the dividend income on that. So dividend income should be shown here, right? Then we can have exchange income, right? Exchange is foreign exchange basically. So foreign exchange is the earning that the bank is actually doing, right? Because of the exchange rate movement, the treasury function is basically doing this thing. Okay, then we can also have income or loss on derivative. If you have any kind of a derivative, so you must be earning, your banking company must be earning the derivative, they must be earning the income from the derivatives as well. Derivatives basically, because in Pakistan we don't have a very vast market of derivatives. Most of the cases we have forward, right? And most of the cases we have currency forwards. So banks are earning on that. So if they are earning on that, they have to show this income from derivatives as well. Then we can have gain on sale of securities. This is the gain that you are earning. This is the realized gain of any sale of investments. So if you are earning any kind of a capital gain, so you have to show it here, right? Then we can have other income, like for example, this is the same thing that we have in manufacturing industry as well. Other income includes your gain and loss on sale of fixed asset. It also includes your gain and loss on sale of T-bills, PIBs. See, so we can have this kind of I mean, there are a number of things. We will see it when we will come to the notes, right? So this is the total of the non-markup, right? So then we can have operating expense. This includes all the expenses of the bank, right? It includes the salaries, it includes the rent if you're paying anything, it includes the utility expenses, it includes insurance charges, director fees, number of things. We will see it when we will come to this note number 31, right? Then we can have the expense of worker welfare fund. If you have paid the worker welfare fund, which banks are paying, so you have to reduce, you have to deduct it, right? Then we can have other charges. If you have any other charges, you can put it here, right? And then we can have a provision or write-off. Write-off, actually write-off is not that simple. Write-off should be approved by the board in most of the cases. Write-off cases are approved by the board, so write-off should be included here. Then we can have provisions. These provisions are basically the bad debt provision, right? So all the advances, all the investments provision, and any other provision should be included here. And if you have any extraordinary item, like once in a blue moon, if you have that kind of a thing, so you can reduce it, or any unusual thing, right? For example, God forbid, for example, this flood is creating this kind of a situation, which is not a ordinary situation. This flood is an extraordinary situation. So all the banks who are facing any, any losses, any expenses, anything, so they have to show this thing here because it's unusual item, it's an extraordinary item, right? Then there's a tax. We can have three kinds of tax. One is current year tax, the other one is prior year tax, and the third one is deferred tax expense. So all the expenses of the tax should be reduced from this PBT, right? Then you will get your profit after tax, right? Then, like any other company, the banks are also supposed to show the basic EPS and diluted EPS as well. Well, that's the part of the P&L account, and definitely you all understand that we have to show the other comprehensive income, which we should not include in the profit and loss account. It includes the translation effects of foreign currency, foreign branches. Then it also includes the surplus or deficit on any, investments, any defined benefit obligation, remeasurement gains and losses should be included here, and revaluation surplus movement should be included here, net of tax. And there's a non-banking asset. What are non-banking assets? Well, non-banking assets are settlement assets, which the banks are getting against their debt obligation. For example, the bank has given a loan to a party and that party is now default. So against that, they have, because of the settlement, they have to do the settlement as well. So they have given any kind of a property. So that property is actually included in non-banking assets. Okay. I hope I'm making you understandable. Okay, then we have statement of changes in equity. We have share capital. If there is an overseas bank or if there is a branch operation working here, so head office capital should be included. Then we can have capital reserves with us. If there is any capital reserve, so you have to include that. Then there is a statutory reserve that I already told you all that statutory reserves are the compulsory reserves kept by all the banks, and there's a regulatory requirement to share your certain percentage of profit for that, right? Then we have revenue reserve with us, right? And then we have surplus / deficit on revaluation of investment and fixed asset. So all the unrealized investment, revaluation surplus or deficit should be included here. Investment as well as fixed asset and non-banking assets should also be included here. Okay. And if there is anything else, so it should be included here, right? And we have unable profit with us. Well, banks can also keep the reserves of their rainy days, for example, right? So they can also create a reserves of like we have this one is included here, right? This is a revenue reserve. But banks can also keep a reserve. For example, they can, they foresee because of their risk management evaluation, if they feel that they should keep a reserve for their against some customers which are doing good at the moment, but they have a feeling that because of the change in circumstances, they can create any kind of a trouble. So they can keep a reserve for loan losses, right? So they can keep a reserve for loan losses, right? So they can also create that kind of a reserves, right? But definitely that reserve should be approved by the board of the bank. Okay, then we have a cash flow statement with us. It's a normal cash flow that that we can have in any, manufacturing company, right? It's not a special thing for any reason, right? Here we have the operating activities, we can have investing activities and financing activities. So all the things are almost same here. Then we can have the notes to the accounts, and we have to put all the policies of of the assets here, and like for example, what is the policy of the investment, what is the policy of the advances, what is the policy of the lending, what is the policy of the cash and cash equivalent, what is the policy of deposits, borrowing, you see. So all the policies of the banks should be written here, right? Okay, now let's move on to the notes to accounts now, right? Because this is a kind of a non-numerical part, right? By the way, in this statement, the banks are saying that we are preparing our financial statement according with IFRS, right? And any IFAS reference like Islamic financial accounting standards, right? Okay. Then we have to refer to the Companies Act 2017 reference as well. And the most important thing is the Banking Companies Ordinance reference as well, because banks fall under the Banking Companies Ordinance 1962, right? So, so let's start with the numerical part. And let's start with the first one, that is cash and balances with treasury. If you let me take you back. This one
Can I
is the
interrupt
first.
you here?
Yeah, please.
There's a question regarding the placement of insurance in the financial statement. So I thought before moving on to the next segment, I think we should answer this question. So Mahad Hafiz is asking, where will insurance claim be reported? Example, insurance claim against damage to a specific branch.
Insurance claim against any specific branch.
If there
What do you
is
mean by that? Do you mean that the insurance claim by my branch? I mean, is there a claim against my branch about? I mean, the branch is claiming against the insurance. That's what you mean. For example,
yeah,
if there is
yeah.
a fire
Yes,
erupted in any branch and that branch is actually claiming that insurance.
yes, that's correct.
Okay. Well, if there is any loss, it has to be reported in the operating expense. But you are actually claiming the insurance side as well. So the amount that you will be recovering should be included in the other income side. But since this expense has already been done, or if there is any, for example, provision that we are keeping here, for example, other provision and something like that, so you can keep this here, right? Because this is a claim kind of a thing, and this is not my routine expense, so we can include it in the provision side. Okay.
Thank you. You may continue.
Okay, thank you. Okay, now let's look at this cash and balances with treasury bank. You can see, as we discussed, actually I was telling you to look at this. That was our asset side. And what was the first line item? It was cash and balances with treasury bank. Now look at this. This is the first one, that is cash and balances with treasury bank. We can include the cash in hand here. We can include the balance that we are maintaining with State Bank of Pakistan. What is that balance? It's a CRR balance, CRR balance basically, right? CRR is basically 6% of the banking deposits. Basically, it's a regulatory requirement to keep a certain amount of banks deposit with State Bank of Pakistan, right? And we have to keep this in our bank that we are going to open on behalf of State Bank of Pakistan, and we have to keep this amount of CRR in these accounts, and we cannot touch on that, and we cannot use these balances. Reason being, actually, what State Bank is doing? State Bank is saying, okay, you have 100 rupees deposit, so you can use 94 out of it. You cannot use the remaining 6 from that, so that if there will be any kind of a trouble with the bank, so they can reduce the percentage of that CRR. Okay, so this is very important. The banks are supposed to keep this CRR with them, right? With State Bank of Pakistan, if you're keeping any local currency current account, so you have to keep it here, right? And then we can have we keep two kind of account. One is current account, the other one is deposit account. Okay, so current account could be in local currency, current account could be in foreign currency, right? Okay, then we can have other central bank. As I already told you all that we those banks who are operating out of Pakistan, so there could be a requirement that they have to keep some reserve requirement on behalf of their foreign regulators, because for example, there are multiple branches of National Bank operating out of Pakistan, and our branches are required to keep this kind of a account, and it could be in current account, and there are deposits accounts as well, right? Then we can have with NBP. Actually, banks are also supposed to keep their balances with National Bank of Pakistan as well, right? National Bank is not supposed to keep any kind of account with the bank, because National Bank is operating as a regulator when they don't when the other banks are not there. Like for example, okay, let me put it this way. You see, State Bank cannot operate in all the Pakistan, right? So where there's no account of State Bank, so they kept this account with the National Bank, right? Okay, the next one is price bond. Previously, price bond was not included in cash and balances, and this I mean before 2000, I believe 18, price bond was included in. We used to include it in other assets, but now after the change of the format, price bond are now included in the cash and balance with treasury. Then we can have balance with other bank. So if you have any bank, if you have any balances with other bank in Pakistan and out of Pakistan, so you can keep it, right? I mean, for example, out of Pakistan, there are a number of banks who are doing current account and placement account with the banks, right? Because there are foreign placements as well. So placements are one of the area where banks are keeping their money, right? So in Pakistan, if you're keeping any amount in Pakistan, if they're keeping any current account, so you have to keep it here. If you are keeping any amount in the deposit account, so you have to keep it here. And if you are keeping any account outside Pakistan, like for example Nostro, if there is any current account replacements, so you can keep it here, right? Then we can have lending to FI. Actually, the point is this 1.5 hour session is actually a very small session as far as if you are asking me my assessment, because banks financial statements are very huge, right? Because after this balance sheet, I mean asset and liability side, we have special notes as well, right? So I'll try to keep the things as quick as possible so that we can cover the maximum part, right? Then banks can also lend, and they can also lend to the financial institutions. They can do their lendings in terms of call lending, call money lending. They can also do reverse repo. One of the major line item is reverse repo, right? Then we can have buy module. Buy module is an Islamic product, right? And it can be done with the State Bank of Pakistan. It can be done with any other bank as well, right? And if there is any other, so you can include that thing as well. And if there is any provision, so provisions should also be included in lending to FI, right? Well, lending, there's a sub note of that lending, and that lending could be a local currency lending. There could be a foreign currency lending as well, right? If you are giving any T-bill, PIB, or any other government security as a collateral in lending, because in lending we are accepting the market T-bills, right? And we are accepting the PIBs as well. So if there is any collateral, So collateral should be kept as well. Okay, then we have to classify that lending into the domestic and overseas, and we have to, for domestic, we have to give the provision schedule, like how many of the lending is in OEM category. OEM is other asset special mention. What is OEM? Basically, as per PR, that is prudential regulations, banks are supposed to classify their assets in accordance with the number of days. For example, if the asset has crossed, if the amount is not recovered, or the markup is not, the markup is not recovered in 90 days. So after 90 days, the bank will put that thing in OEM. Then after 90, so after 180, it will be in substandard. After 70, it will be classified in doubtful. And after 360 days of from the date of lend, it should be classified as loss, right? Okay. Well, for overseas, you have to do the same thing, but that should be with the number of days, and that is the same thing basically. Then we can have investment note with us. You can see there are three categories. One is HFT, the other one is AFS, and the third one is held to maturity. Held for trading. Held for trading. I'm sure you all must remember that IS, where we can how to classify the HFT. The investment kept for the sake of trading should be included here, and that investment could be a federal government security, like for example HFT. Sorry, like for example T-bill, PIBs, right? If there is any provincial government security, if there is anything, then you can include that thing here. Then we can also kept any ordinary share capital, right? If there is any non-government debt security. Non-government debt security means, for example, the one issued by WAPDA, right? So you can include that thing here. If there is any foreign security, like for example, foreign government security, and you are keeping it for HFT, you have an intent to trade it, so you can include it here, and then others, right? Then we can have AFS, right? AFS also includes a foreign government security, that is your HFT, your PIB. Okay, then we can have provincial government security. If there is any provincial government security, we can include that thing, right? Then we can have shares. Shares include all the shares: listed shares, unlisted shares, preference shares. Okay, voting right will, in Pakistan we don't have that kind of a concept, but we can have the concept of voting right in overseas companies. So voting, non-voting rights, that shares can also be included here. Well, non-government debt security, like for example, TFC, debentures, PTC, sukuks, they all can be included here, right? Then we can have foreign government, foreign securities, as we discussed, GOP foreign currency bond, foreign government security, if there is anything like that, and foreign government debt security, they all can be included in foreign securities. And if there is anything, it has to be included here. But the main condition is it has to be classified under AFS security. The next one is held to maturity, right? Okay, held to maturity also includes the same thing. That is STM, T-bill, PIBs, right? Any provincial government security, any non-government security, like for example, TFC, Sukuk, debenture, PTC, they all can be included here. And same is the case for foreign security, where we can include the GOP foreign currency bond, foreign government security, and things like that, right? If you have any investment in associate, you have to keep it here. If there is any investment in subsidiary, you can have to keep it here. If there is any investment in joint venture, so you have to keep this thing here. Let me give you one particular example. Like National Bank has investment outside Pakistan in Al Jazeera, Bank Al Jazeera. So that investment is included in AFS, right? because in AFS we can keep the surplus, right? Because I'm sure you all know that thing, that HTM, there's no concept of revaluation surplus in HTM, and in AFS we can book the surplus of that investments, right? And definitely for HFT again we can include that surplus here, right? So this is the investment note. The investment, there's another classification of investment note, and that is that investment note, that investment, this 8.1, we have to make it from this point of view as well. For example, we have to show the cost of the federal government security, like for example, so in market T-bill, it includes your HFT, it includes your AFS, it also includes your STM as well, right? Then we can have PIB in the same model, right? We can have Ijara Sukuk in the same model, and then any other security. Then provincial government securities can be included here. Shares, listed, unlisted, preference should also be included here, right? And there's a non-government debt security. If there is non-government debt security, like we have discussed, TFC, so listed and unlisted TFCs, listed and unlisted Sukuk, listed and unlisted listed and unlisted Sukuk, PTC, debenture, they all can be included here, right? And then we can have foreign securities, like for example, government security. If there is a foreign non-government security, it can also be included here, right? Well, Muneeb, the question is, HFT includes those securities where we have a trading intent. Well, that trading intent, the IS basically says that, for example, if you are keeping any shares in HFT, so you should not sell it in a shorter period of time, right? That is, and the shorter time period, the IS says is 90 days, right? So if you are keeping, for example, if you are keeping a share in AFS and you are trading it in 90 days, and there are more than one instances, so the auditor or the regulator can ask you why you are doing it, because you are actually keeping it in the AFS and you are doing the trading again and again. The point is, IS cannot, IS not saying that you cannot sell it. In shares, there's no thing like that you cannot sell it. Well, if there is a need, I can sell it within 90 days, but that should not be my regular feature. At that point of purchase, I should decide it with what is my intent. I should keep it in, am I keeping it for the purpose of trading? I should sell or purchase it, right? Am I going to do it again and again, or I'm keeping it with the view of the long term? So that's one of the major decision for keeping it in the trading or AFS portfolio is the intent. What is the intent? What is the strategy? What is the decision that you're going to take on the date of purchase? Okay, I hope I'm clear. Okay, then we can have non-government debt security, foreign government security. Then we can have associates, right? For associate, we have to show the cost as well. We have to show the provisions as well. We have to show the surplus as well, and then carrying value. And by the way, we have to show the current year like this. It's a movement sheet, right? And there's a prior figures as well, right? So we can, I mean, the whole format here is bifurcated into this one, right? And then if there is any investment given as a collateral, now how come my investment will be given as a collateral? The point is, if I'm going to do the borrowing, right? So the borrower can ask me to give me a security in terms of T-bill and PIB, so that his investment will be secured. So that, I mean, sorry, this market T-bill and PIB can be kept as a collateral as well, right? So if there is anything which is a collateral, you have to show it. Then there's a provision for diminution in investment, right? If there is a provision, so you have to show the movement schedule. There's an opening balance, exchange difference, charge during the year, reversal, disposal during the year, and transfer, and then and amount write-off, and then closing balance, right? Then we can have provision against debt security, right? If there is a provision against the debt security, and that debt security should be classified into domestic as well as overseas. And just like we have done here, if you remember, in lending to FI. So for overseas, for domestic, what we have done, OEM, substandard, doubtful, loss. So here we have to do the same thing. OEM, substandard, doubtful, loss. And for overseas, again, it will be in the form of, because in overseas we do not have the PR applicable, right? So for overseas, they are doing it in terms of number of days. Although both the same things are same, but still you have to show it. Disclosure should be like this. Okay. Quality of AFS, right? So we have to show the government guaranteed figures as well. Definitely against the market T-bill, there's a government on the back, and government is giving the guarantee that this T-bill will not be default. This is the government guarantee. That's why the risk charge on T-bill is zero. So PIB and T-bill both are in the same category. If there is a gyroscope, again it's in the same category. If there is anything else, then it can be included here. Then we can have provincial government security, and if the government is guaranteeing it, it's a provincial government guarantee, by the way. It's not a federal government. Federal government can only give guarantee on their federal government securities, not provincial government. Provincial government can give their guarantee on their own, securities, right? Okay, then we can have the listed companies. This is the sector-wise bifurcation of the shares. So we have to bifurcate the shares into the listed companies share and unlisted companies share. For listed companies, you have to give the sector-wise bifurcation, right? And then unlisted, there are a couple of sectors in which we have to classify. And for unlisted companies, we have to give a disclosure in terms of entity-wise, right? Like you have to give the name of the entity for that, right? Then we can have non-government debt security, like for example TFC. For TFC, you have to give a rating, whether it's a AAA rated TFC, whether it's a AA, and AA minus, whether it's A plus, A or minus. So you have to give your non-government security like this, and it has to be bifurcated into listed and unlisted as well. And then we can have foreign securities, right? Foreign securities includes government securities, right? For example, if my if my bank is operating in, for example, Japan, so if there is any Japanese government security that I'm buying it, so I can show it here, right? But that should be with the name of the country. Then non-government debt security. Non-government debt security should be given bifurcated into. By the way, the heading is foreign security. So for foreign security, we can give non-government debt security as well, and that should be bifurcated into the listed and unlisted. And likewise, we have done it here in domestic, so we have to do it here in foreign security as well, right? So we have to do the same. We have to bifurcate the AAA separately. We have to bifurcate the AA separately. We have to bifurcate the A plus, A and A minus separately. So you have to do it like this. And if there is any foreign security, if there is a foreign equity security, so we have to bifurcate the listed and unlisted as well, right? And it should be with the name of the company, right? If there is a held to maturity, so you have to give the held to maturity security particulars for market tables, for PIBs, for Sukuk, and any other government security. So the same thing, the same format should be used for held for maturity securities, right? This is the same thing that we are doing. We have discussed it, okay? Okay. Okay, the next most important thing is the advances. Banks, one of the major line items of the banking industry is advances, right? We have to give all kind of advances here. Like it's a long-term, short-term, cash finance, demand finance, running finance, Islamic finance, or any other finance. Well, you have to show all the finances here, right? And then Islamic should be shown separately, and bill discounted and purchase should be shown here. So the total of the three is the gross advances, right? And we have to show the performing as well as the non-performing side as well. Because definitely the loan must be non-performing as well. And with that, after the gross advances, we have to reduce the provision as well. There are two kinds of provision. One is specific provision, the other one is general provision. Specific provision are prepared on the basis of the PR that we have already discussed. That is OEM, substandard, doubtful, and loss categories. So if there is a substandard category, you have to provide 25% of the loan. If there is a doubtful category, so you have to give you have to do 50%. Substandard, doubtful, and loss for loss. Sorry, for OEM, after OEM it will be 25%, after substandard it will be 50, then doubtful 75, and then for loss it will be 100%. And general provision is basically we have to keep this general provision for consumer financing, or this is as per the State Bank circular that we have to keep general provisions, because for consumer side the State Bank is saying that you have to keep this general provision, but it's not only for the consumer side. You can also kept this general provision for the corporate clients as well, right? If you feel that I have to keep for example, it's not bad, the client is not bad, but in future you are predicting that it may cost us, so you can keep the general provision for that, right? Okay, after that we also have lease finance. Okay, so lease finance, for example, the bank has given a lease, so this bifurcation should also be given here, right? So lease rental receivable, residual value, minimum lease payment, finance charges. I mean, you have to keep this for less than 1 year, 1 to 5 years, and 5 years and above. So you have to give this movement schedule in net investment in finance lease. Okay. Well, the gross advances should be bifurcated into local and foreign currency as well. And after that, you have to bifurcate the NPL. Non-performing loan is also called as NPL, right? NPL should be bifurcated into the domestic as well as overseas, and the same category of OAEM, substandard, doubtful, and loss, they all should be kept here, right? For overseas, we have to do the same, right? And against that NPL, you have to show the provision as well, because as I already said, for example, if it's 90 days past due, so the first category is OEM, right? So OEM will be the total amount. For example, 100 is the amount. So after that, we have to keep a provision of 25%. That is 25. Against that 100 rupee loan, the bank is supposed to keep a provision of 25 rupees. So you have to show the provision of 25. So against the 100 NPL, there'll be a 25, right? And so on. And then we have to keep a movement schedule. This is the main movement schedule of provision. What is the provision? Specific provision of balance opening, exchange, if there is an exchange rate adjustment, if there is any charge, definitely there will be a charge, right? And then there'll be a reversal if there is any reversal. So you have to charge and reversal should be netted off. And After that, we can reduce the amount write-off. Definitely, if there is any amount write-off, it should be removed from the specific provision because it's already write-off. So after that, written off, if for agriculture, you can show it separately, right? If there is any movement, so you can also keep this and there will be a closing balance. Okay, provision for advances, again, if there is any, that is provision. For provision, you have to give a local and foreign currency bifurcation as well. You may have a confusion, what is this? This is the gross advances, local and foreign currency. And this is the provision movement. I mean, provision should also be classified into local and foreign currency as well. And if there is any write-off, and this write-off is 500,000 and above, so you have to bifurcate the write-off of 500,000 and above separately, right? And if the write-off is 500,000 and below, so you have to show this amount here, right? And the detail of the write-off of 500,000 and above should be mentioned here, right? Then the next is fixed asset, and fixed asset includes your CWIP and your property, plant, and equipment. And well, CWIP could be for civil works, it could be for equipment, it could be for advance or supplier, it could be for anything else, any other thing, right? Then it's a typical fixed asset movement schedule of any banking company, right? We can have freehold land, leasehold land, building on freehold land, building on leasehold, right? Furniture, electrical appliances, right? Electrical and office equipments, vehicles, others, right? Okay, this is the movement schedule of the fixed asset, right? And you have to show the comparative as well. So you have to show the current year as well as the prior year both. Then we can have intangible with us, right? Intangible is opening balance, cost, accumulated amortization, right? So you have to reduce it, right? After that, if there is any addition, so you have to add that addition, right? If it's developed internally, so you have to give it. You have, if it is, for example, if the software is purchased outside, so you can put it here, right? If there is any business combination, so you can put it here. If you are doing any, I mean, giving any purchase goodwill, so you can put it here. Sorry. If there is any disposal, so you can reduce it, right? If there is any exchange rate adjustment, any other adjustment, if there is any amortization charges, so you have to reduce it, right? And there's a closing book value. Okay. This is the same, I mean, it's a current year schedule, and this one is the prior year schedule. And we can have the deferred tax asset. We have to show the deductible and the taxable temporary differences here, right? And this one should be shown in the deferred tax asset side. If there will be a deferred tax liability, so definitely the taxable temporary differences will be up and deductible will be down. Okay. And at a time, you have to show one. Either it could be a deferred tax asset or it could be a deferred tax liability. Okay, then we can have other assets. Okay, other assets could be markup receivable on your advances with net of provision should be included here. Markup receivable on foreign currency, local currency should be separately shown with net of provision. Then we can have advance deposit and prepayments. Then we can have advance taxation, as we have already discussed when we were discussing the balance sheet size. And we have non-banking assets. And by the way, this non-banking asset, this is NBA. Give me a minute. Give me a second, sorry. Okay. Again, we can have branch adjustment. Branch adjustment is basically the interbranch. The interbranch balances are called as branch adjustment in banks, right? Either it could be an asset side, it could be a liability side as well, right? Then we can have the gain on forward exchange contract and acceptances as well. By the way, acceptances are now being included as the on balance sheet side. Acceptances are basically, what is acceptances? The LC arrangement in which the bank is actually retiring their documents to the customers, and bank technically it's a liability on our bank, right? Because in LC we do not retire the documents unless and until there is a payment received from the customers, right? But in acceptances case, we are actually retiring the documents before taking any kind of a payment from the customer. So this situation is technically it's a liability on the bank side. So State Bank says that you have to keep the asset as well as the liability side at time, because you are not your customer is not running away, but since you are actually retiring your documents of the customer, so technically there is no claim of the bank unless and until, I mean, there is a arrangement, there is a agreement, but the commodity documents are retired by the bank. So this has to be a liability side on the bank. So for example, if there is a 100 rupee liability, so we have to show the 100 rupee acceptances as well. So at a time we have to show both the acceptances on both the side, on the liability as well as the asset side as well. Because from liability point of view, yes, it's a liability, we have to pay, because since we have retired the documents, we have given the original documents to the customer, so it's a liability on customer part, sorry, on our part, right? Because for example, if customer will run away, so we have to pay, so it's a liability on the bank. But at the same time, my customer is actually not running away, so but since I have retired the documents, so I am booking the liability, but at the same time I'm booking the asset side as well. I hope I'm clear on this, because this is a very important thing, important point. Then we can have others as well. Then we have to reduce the provision for other asset. If there is any provision, you are keeping any kind of provisions, so you have to reduce that thing as well. If there is any other asset, if there is any surplus on non-banking assets, so you can keep it here. Well, we are keeping this non-banking asset in the fixed asset side, because these are the fixed asset. We are not showing it in the other asset, because in settlement, for example, let me give the example. If you have heard about this building in front of State Bank of Pakistan, it is a 13-story building of Summit Bank. So it's a debt swap claim. They have taken it in debt. So that building was a debt swap claim. The Summit Bank got this building in the debt swap arrangement, right? So it's a fixed asset. This has to be shown in the fixed asset here. So we are keeping it in our fixed asset. Okay, then for the non-banking asset, there should be a movement schedule as well, right? Opening, addition, revaluation, disposal, depreciation, impairment. You see, you can see the movement schedule. It's a typical fixed asset schedule. Okay. Then we can have gain and loss on disposal of non-banking asset. If there is anything, okay, you can show it. If there is any, I mean, if there is any provision on other asset, so you have to show it, whether it's advance deposit, I mean prepayment provision, if it's a non-banking asset provision, or if it's a others provision. I mean, if there is anything which is not covered in any of the two above, so you have to keep it in other, right? Then we have movement schedule of the other asset, opening, charge, reversal, provision movement schedule of opening, charge, reversal, write-off, and then closing, right? Then we can have contingent assets, if there is any contingency asset. Then we can move on to the liability side. The first line item of the liability side is bills payable, right? We have to show both the bills, whether they are in Pakistan or out of Pakistan, right? The next thing is borrowing. Borrowing is one of the second most important side in the liability side, because the first one is basically deposits, right? This one is usually the second largest one in any of the balance sheet, right? So borrowing from the State Bank of Pakistan under their export refinance scheme, under their LMM, that is locally manufactured machinery scheme, or any other agri. There are a number of schemes, agri, consumer. See, there are a number of schemes in which banks, State Bank of Pakistan is giving the borrowing, right? Then we can have the reverse agreement borrowing, right? That is repo borrowing. This is one of the largest line item of the borrowing, right? If there is any borrowing from subsidiary, Mudarabas and associates, so you have to show this here. If there's a borrowing from the directors, again you have to show it here, and then other. And then unsecured. That one was secured from the State Bank of Pakistan, from repo borrowing, they all are secured, right? Unsecured. In call borrowing is the unsecured area in which the bank do not give any kind of a security. If there is overdrawn nostro, so you can put it here in other, right? By the way, if there is a surplus of nostro, it has to be here. Cash and balances with other bank. This one, cash and balances with other bank outside Pakistan. In most of the cases, it's shown in current account. But if there is an overdrawn nostro, I mean, it's a liability on us, so you have to show it here, and then other. Okay, so this is the bifurcation of the borrowing. Then we have to show the local as well as foreign currency bifurcation of the borrowing, right? So the total borrowing should be bifurcated into the local as well as overseas. Okay, the next schedule is deposit and other account. This is one of the major source of obtaining deposits and or getting money, because the banks are dependent on deposits. The more deposit they have, the more lending they can do, right? So we can take deposits from customers, and we can also take the deposit from FI, financial institution. Customers like you and me, we all are customers. We can do local currency deposit. We can also open the foreign currency accounts as well, right? So the current year position and the past prior position, they both has to be shown. And then there's a financial institution deposit. Now, what is the financial institution deposit? How can a financial institution deposit their amount with the other financial institution? Is it kind of a, what do we call it? I mean, are you doing it? What do we call it? There's a specific term. Sorry, I forget. Okay, why banks are taking FI deposit? Like for example, in National Bank is operating as a regulator bank, and they are doing they are accepting deposits from different banks. National Bank is accepting deposit from different banks on year end, on month end, on quarter end, so that the settlement process can be done. Because State Bank of Pakistan do not operate all over the Pakistan, right? So they authorize National Bank of Pakistan to accept the deposits as a regulator on month ends or on quarter ends, on periodical ends and year end, to take it, and they can then through the treasury all the amount settled down with the State Bank of Pakistan. So this is one of the case, but there are instances where we have accepted, we are keeping we have taken the TDRs of the other banks as well, right? but that amount is very nominal. The major reason of FI deposit is that one that I have already told, right? But you have to show the bifurcation of current, saving, and TDR and any other bifurcation in your financial statement, right? Then the bank should classify all these deposits into individual, because the deposits can be come from the individual side, it can be from the government side, it can be from the public sector entities, it can be from the banking companies, it can be from the NBFIs, and it can be from the private sector. This government deposit is one of the topic of treasury single account these days, and banks are asked to return the amount that they are getting from the government side. Okay, so you have to bifurcate that thing here. So all the banking companies are supposed to do this kind of a disclosure, right? By the way, we are discussing the ML accounts. It's a very comprehensive disclosures, and it gives you a very good idea on how to go about it. Then we have liabilities against assets subject to finance lease. Okay, if you have a liability, so you have to show the movement schedule like MLP, finance lease charges, principal outstanding, right, for the current year and the last year, right? And you have to show the bifurcation of less than 1 year, 1 to 5, and 5 and above, right? And there is a subordinated debt as well, right? If you have any subordinated debt, so you have to disclose that amount as well. Then we have a deferred tax liability. Deferred tax, you see, we have already discussed the deferred tax asset as well. Deferred tax asset and deferred tax liability. It could be any one of them, right? So you have to show the current year and the prior as well. Then we have other liabilities. Other liabilities, one of the major line item of the other liabilities are already given here. It's a markup or return or interest payable on the deposit holder. You have to pay your deposit holder definitely. You have to pay the deposit holder for the local currency. You have to pay the deposit holder their markup or their profits on foreign currency as well. If there is any unearned commission, so unearned commission is the liability, you have to show it. If there is an accrued expense, so you have to show it, okay? And if there is an advance payment, again, you have to show it. If there is any current tax liability, if it's not a advance tax, and if it's a current tax liability, so you have to show this thing as well. But in most of the cases, we all have advanced taxation rather than current tax. Then the acceptance is here. As I already told you, there are two legs of the acceptance. One is on the assets, other asset side, and the other one is on the other liability side. Then we can have other unclaimed dividend. Definitely, if the bank is paying the dividend, so there are a number of shareholders who do not claim it, right? So that is actually the liability of the bank, and bank has to pay it. Okay. Then we can have dividend payable amount, right? So dividend payable, if there is a dividend that you have to pay for the current year, so the current year dividend payable should be shown here, right? Then there's a loss on foreign exchange contract. Then we can have if there is a branch who's operating here, so unlimited HO expenses, you have to rebate, so it's a liability and you have to send it. If there is a payable to defined benefit obligation, like for example, defined contribution plan, like for dividend benefit plan, definitely your pension, right? Pension, gratuity, benevolent fund, compensated absences, they all can be included in the two heads. Then charitable charity funds balance, if there is a charity fund, so you can include that thing in, right? And we also have the off balance sheet item. If there's a provision for off balance sheet item, so you have to include it here. If the security deposits against lease, or if there is any other security deposits, so you can include it here, and then others. So off balance sheet, again, you have to show the movement. Then we can have the share capital, right? Share capital should include your share capital is your ordinary share capital. It also includes your bonus issue as well. If there is a surplus, you have to show the surplus on assets as well, right? You have to show the surplus on fixed asset as well. And if there is any non-banking asset, so you have to show the non-banking assets as well, right? That's all from the balance sheet side. That's all from the balance sheet side. Then we have contingencies. If the bank has contingency, definitely the banks are having contingencies. So you have to show the one which is classified in guarantees, like for example, performance guarantee, okay, and there are a number of other guarantees. So guarantee should be included here, right? If there is any commitment, like for example, trade-related commitment, direct credit substitute related commitments, so all should be written here. For guarantees, again, financial guarantee, performance guarantee, or any other guarantee, the bifurcation should also be given here. For commitment, we can have the commitment of LC, we can have the commitment of forward exchange contract. For forward government security, if there is a derivative commitment, if there is a forward lending, operating lease, commitment in acquisition of operating lease, right? For example, you have made the commitment, but you have not paid it. So you have to include it here, right? If there, and that should be for the fixed asset as well as for the intangible asset. And if there is any other commitment, so you have to include it here, right? Then there are a couple of sub notes of that, right? For forward, there are two kinds of forward, right? One is purchase, the other one is sale, right? And then we can have foreign government security transaction, and there's a forward, I mean, the purchase and the sale as well. Then we can have derivative, there's a purchase and sale as well. And we can have lending, forward lending as well. For forward lending, you can take forward call lending, you can take forward repurchase agreement lending, any undrawn form of standby facilities. So you can include all of them here, right? Then we can have operating lease and any other commitments here, right? You have to give the derivative note product wise on this, right? It's a detailed note, you can include it here. Okay, so now let's quickly move on to the P&L side as well. You can see the banks can earn their interest on their loans, investments, lending to FIs, and balance with other banks as well, right? We have discussed all the balance sheet line items, so we can include it here. And then we have to show the markup expense side. Definitely the markup expense comes on deposit sides, borrowing sides, subordinated debt if there is a debt, and then foreign currency swaps, cost of foreign currency swaps should be included here and other. And if there is a fee and commission income, that's income side by the way. So it could be from branch banking commission because the banks are doing this work, consumer finance related fee, credit card fee, right? Commission on trade, commission on guarantee, commission on cash management. Cash management is a very happening kind of area in the last couple of years because the banks are now providing the cash management services to the corporates and they are charging commission on that, right? There's a commission on remittances. This is one of the biggest line item for the banks now. Banks are providing the remittances services, right? If there is a bank insurance, again, so you have to show that thing. And other, if the others are more than 5% of the total, so you have to include the line item as well. Then we can have the gain and loss of sale of security. The realized and unrealized part should be shown separately, right? For realized, you have to show the federal government security, the provincial government security, the shares, okay? The non-government debt security, the foreign securities associated with. So you have to show any kind of gain in this bifurcation, right? Then we can have other income. Other income major line item is rent on property, gain and loss of sale of fixed asset, gain and loss of sale of non-banking assets, and other, right? It's a normal thing, right? Other income is not a big deal. But this fee, commission, gain and loss on sale of security, dividend income, Okay, so these are one of the major line items for the banking industry, because banks are giving other than loans and investment services, right? And they are concentrating on that area as well because it's a lucrative area. So because of the geographical diversification, the banks are into it, and they are doing this work. Then we can have expenses, operating expenses. We can have the compensation. Compensation means the salaries, right? Then we can have property-related expenses, like for example, rent and taxes, insurance, utilities, securities, repair and maintenance, depreciation, and other. Previously, this was not the format. All the line items are just one. Now they have bifurcated the property expenses separately, the IT-related expenses separately, and other operating expenses separately. Now we can have for IT, we can have software maintenance, hardware maintenance, depreciation on IT items, amortization on IT items. So that depreciation was on property item, right? So the classifications are now very different, right? And they are now, because IT is one of the major area of any bank now. So they have bifurcated the property with the IT, or IT with the property. Then any other expenses, like for example, director fee and allowances to Sharia board, if there is anything like that. Then legal and professional fees, outsourcing fees, traveling, depreciation, right? Depreciation, training and development, postage and courier charges. Then we can have communication, head office and regional offices, right? Stationery and printing, marketing, donation, auditor, and other. So again, if it's a material amount, materiality level is 5%. So if the total, if the line item is more than 5%, 5% and above, so you have to show the separate line item in the operating expense. For compensation, again, we have to show, look at this 31.1. So we have to show the bifurcation as well. The compensation includes your fees and allowance, your managerial remuneration. It could be a fixed, it could be a variable, it could be bonuses, it could be awards. You see, so variable and fixed should be mentioned separately. Definitely, bonuses are not fixed. There are bonuses which are fixed, so fixed bonuses should be included in fixed, but there are bonuses which are variable. It's based on performance, right? So if it's on performance, if the performance is there, so it will be given. Otherwise it will not be given, right? Then we can have charge for defined benefit application. There is anything, definitely there is anything. So you have to mention that there's a contribution to defined contribution plan. We can have rent and house maintenance, utilities, medical, conveyance, and so all the items related to the employees should be mentioned here, right? And then total. Okay, we have to show the bifurcation of donation, right? Donation of 500,000 and above should be separately mentioned, right? And auditor remuneration should be separately shown. How much is audit fee? How much is the out of pocket? How much is the certification cost? How much is the taxation services? Why they are the bank, the regulator interested in this? Because with the auditor, they are actually engaged in other services as well. The auditor can also give the taxation services. So if there is anything like that, so you have to show this here, right? Special certifications, fee for employment fund. If there is any audit, special audit of that, so you have to show all of them. Any charges. If there's a penalties imposed by, so all the penalties of the state bank should be mentioned. And all the penalties by the other regulatory authority. For example, if there's a regulatory authority out of Pakistan and they are charging any kind of penalty, so you have to mention it here, right? Then we can have the bifurcation of the write-off, supervision against lending FI, so you have to mention it here. Provision for diminution in value of investment, you have to mention it. Provision for loans and advances, this is one of the major line item. And 9.4 should be mentioned here, right? Then we can have other provisions, bad debt write-off, right? And if there is any write-off, or I mean, here's a bad debt, so you have to mention this thing as well. Now you can see taxation, we can have three things in taxation. We can have a current year taxation, we can have a prior taxation, and we can also have the deferred taxation. So as I already told you all, that we have three kinds of taxation amount. Okay, then we have to show the basic EPS, diluted EPS. You all know that what is basic and what is diluted. Then cash and cash equivalent, if there is a staff strength, so you have to show the staff strength as well. Staff strength could be a permanent contract, permanent basis. Staff could be on your contractual basis, so you have to bifurcate them. And there's a third party employees as well. So third party employees, that is your janitorial staff, should be mentioned in your strength, right? Then we have to show the bifurcation of the different defined benefit obligations, like defined benefit plans, like pension plans, gratuity plans, any other benefit, like for example, benevolent, compensated absences. There are a number of plans, right? So you have to show this thing as well, right? And then you have to show the expected rate on that. You see, so these are all the pension, gratuity, I mean, you have to show the PV in accordance with the IS 19. The disclosures are already given here, right? So these are the defined benefit plans disclosures. These are the detailed disclosures of detailed disclosure as per IS 19. Okay. The charge, you see, so you can read it out. They all are here, right? I'm skipping the few things so that we can quickly wrap it up. For compensation, again, the key management personnel, like for example, your senior management, chairman, chief executives, other than CEO. Other than CEO means your president or CEO is here, right? So other than executive, like your group chief and your senior executive, the non-executive, the board members. If there is an executive board member, you have to include it here. If there's a non-executive board members, you have to include it here, right? If there is a member Sharia board, so you have to include it here. If there's a president, so you have to include it here, right? So key management personnel salaries and other management, I mean other risk, material risk takers. Material risk takers are included here, right? Material risk takers are mostly those who are direct reportees to their group chiefs, most of the cases. Okay, so these are the things. I need a quick break for 2 minutes, sorry, or 1 minute.
Sure, no worries.
Okay, I'm really sorry. Okay, so the current year and the prior, am I audible? Firoz?
Yes, we can hear you.
Okay, thank you. So the current year and the prior, both the disclosure should be given, right? Then we have to show the remuneration of the meeting fees of the directors with the name of the directors and their number of meetings that they have attended, right? And number of meetings and number of committees that they are representing. So we have to do that thing as well. Then we have on balance sheet financial instrument disclosures, right? If there is a financial instrument, I mean, we have to bifurcate the balance sheet into this format as well, right? We have to show the investment side on financial assets and non-financial assets as well, right? There are a couple of theoretical notes. Then we have segment-wise bifurcation. The banks are doing this kind of a segmentation. Of example, they are segmenting their treasury operations, they are segmenting their corporate operations, consumer operations, overseas operations, You see, under retail, we have we have retail, we have a separate retail function, we have a separate commercial function, we have a separate inclusive development function. So there are a number of segments that the banks are showing. So you have to bifurcate the profit and loss account. You have to bifurcate the balance sheet, sorry, the P&L of the company, the P&L of the bank and the balance sheet of the bank into this format, segment wise. Okay, and the contingencies as well. This is one of the major disclosure, right? Because this is product wise or segment wise verification. Segmentation is on the basis of departments or nature of operations, we can say. And this one is basically for the geographical. For example, we are operating in Pakistan, we are operating in UAE, we are operating in, sorry, not UAE, Bahrain, we are operating in multiple, Far East, we are operating in Tokyo. So we can bifurcate the revenues and the assets into location wise. Habib Bank is in more than one country. National Bank is in more than one country. There are multiple banks who are operating in more than one country. So they are bifurcating their balance sheet and P&L account, and as well as their contingencies into different segments. And there's a related party segment. If there is a related party transaction, so you have to mention that the parent means if you are a subsidiary and there is a parent, so you have to show that. If there is a transaction with the director, key managing personnel, subsidiaries, associate, joint venture, and other, so you have to show all the transactions with the key with all the related parties. Related parties accordance with, I believe, IS 24. Okay. Okay, so all the balance sheet. Okay, so you can see the deposits from the asset side, the deposit side. You have to show each and everything, as well as the income statement side as well. Okay, then we have a capital adequacy ratio note, right? By the way, previously, before 2018, there was a detailed note here of the car capital adequacy ratio. But now, what State Bank say, okay, you have to show the summary here, and for detail, the detail can be found on the balance sheet on the website of the bank, right? So the detail disclosure is still here, but they have to be shown in the on the websites, right? So that the link should be mentioned here, and that link should be given in the annual report as well. So capital adequacy ratio, liquidity coverage ratio. Liquidity coverage ratio means your LCR and NSFR. That is liquidity coverage ratio, net stable funding ratio. They all should be mentioned here, as well as your liquidity ratio. Liquidity ratio is part of your capital adequacy ratio at the moment, but LCR and NSFR, they both are separately shown on the website of the bank. Okay, and then you have to show the risk management policies as well, credit risk policies. You see, then we have to bifurcate the balance sheet major components into different segments as well. So you can see that investments, non-performing investments, and the provision against them, they all are mentioned. Sorry, they all are mentioned separately here, right? So public, if there is a lending, non-performing lending, so they all can be shown here. Okay, then we have advances. Again, advances should be shown separately here. Okay, there are a number of segments, the number of sectors here, right? Well, these sectors are limited, right? There are multiple sectors. They are the summary of the sector. The State Bank of Pakistan has given multiple sectors, and different reporting packs of the State Bank covers that sector. But this is a summary of that sectoral classifications. There's an Isaac list on the State Bank website, and banks are supposed to report their advances, deposits on that format. So that summary is actually gross advances, NPL. So you have to show the gross advances, non-performing advances and provisions into this summarized kind of a format. Okay. Then we have to make another note of credit risk per industry. So you have to show the credit risk. You have to show the sectoral in accordance with the credit risk. Which one is the most? I mean, you believe that you are. But this is for the contingency, not for the on-balance sheet item. So you have to show the same bifurcation of the contingencies and commitment, right? Then top 10 advances, top 10 funded, non-funded, the whole exposure should be shown here. Sorry. Then we can have the classifications here, right? So you have to show the classification as well. Then we can have this is the province-wise disbursement and utilization. For example, we are dispersing the loan in Punjab, but that company is actually utilizing it in Sindh because the head office is in Punjab and the utilization is in Sindh. So the utilization may be differ. Okay. So this disbursement and utilization should be, there's a separate disclosure. That disclosure was included in the last changes, and the bank are now supposed to show this, right? Disbursements was never included in any of the financial statement disclosure, but after this, the banks are now supposed to show the advances province-wise disbursements, right? And we can have the Punjab, Sindh, KPK, Balochistan, Islamabad. Because Islamabad is a federal territory, we have to show it separately, and AJK and Gilgit-Baltistan. Right, so this is the one, and the market risk should be mentioned here. Market risk related policy should be mentioned here. And we can also have balance sheet. We should split the balance sheet into trading and banking book, right? This trading and banking book should be shown here, right? And we have to show the foreign exchange policies as well, right? Foreign currency assets, foreign currency liability, off balance sheet items of foreign currency. And basically this is the NOP note, net open position note, right? And the bottom line of the net open position should be reconciled with the MCR NOP. And one of the major point of all the auditors is to reconcile the bottom line of net foreign currency exposure. That net foreign currency exposure is basically the NOP. Foreign currency assets minus foreign currency liability, and depend upon the off balance sheet item, whether it's addition or deletion, the net should be reconciled with the NOP position shown in the MCR note, right? And after that, we have to show the equity position into banking and trading book as well, right? And these are the special notes. Mismatch. So we have interest rate mismatch. We can also have currency rate mismatch. I believe the time is running up, so I should quickly wrap it up. I should not go into the detail that much, right? Because how much time we have? I think I told me to close it at 7:30, but the balance sheet is so lengthy.
Yes, I think we try to wrap it up, the balance sheet part, and we can allocate some time in the next session for question and answers, if there are any unanswered questions.
Okay. Why don't we take the question answer is because this is a long. Still, we have a lot of time.
There aren't a lot of questions, I must say, but there are two questions that I can see right now. If you want to take them, then I can tell you these questions.
What alternate do we have?
I think I would recommend that we wrap up the balance sheet portion and the remaining portion of accounting for financial services and we can ask the participants to raise these questions in the next session, and we can answer these questions before we jump into the management accounting part.
That could be also possible. That could also be possible.
Yes.
Okay, so let's. That's a better solution, by the way. Okay, so we have to give this interest rate mismatch, right? I mean, how much your balance sheet, each line item is sensitive to 1% change. For example, 1% up and down change. So we have to make this note in accordance with that, right? Definitely, cash in hand has no role in that. It has no fixed, fixed asset, interest rate sensitivity. But there are a number of line items like investment has the issue. Definitely, if investment is gone up by 1%, so definitely we have to check the sensitivity of that, right? So in advances, if gone up by 1%, so we have to check the sensitivity of that. Likewise, borrowing, deposits, and couple of items of other liabilities and other assets as well. So this is the mismatch of interest rate sensitivity. It's a detailed topic, and I'm giving you an overview only, right? Okay, so we have operational risk policies with us, right? We can have liquidity risk policy. We can have Basel II specific if there is any risk related policy. So you have to mention that. The maturities of assets are current contractual maturity. This is the contractual maturity, right? And we have to bifurcate the balance sheet into different number of days, like we have done here. It's up to 1 month, 1 to 3 months, 3 to 6. Here we have to do with up to 1. I mean, how much is the cash to be matured? So most of the cases, cash in hand maturity is 1 year, up to 1 day, right? For definitely for advances, we can make the schedule. How much is the loans of the banks are maturing in 3 years, 1 years, 6 months, 1 month, and 3 years, 5 years, 10 years, 20 years. You see, so we have to show the. So sorry. So okay. So you can see it. So it's 1 to 7 days, 7 days to 14 days. I mean fortnight, 14 days to 1 month, 1 month to 2 months, and you can see it here. Right? So we have to bifurcate the whole balance sheet into, this is a maturity. It's a currency maturity, right? Currency and contractual maturity, right? So we have to show the we have to show the current year and as well as the prior, okay? And you can see even the equity side can also be shown here, okay? Then we can also have the maturities of asset and liability, expected maturities, right? Of asset and liability. This is the second format, right? And you can see the balance sheet has already been bifurcated on the same format that we have discussed here, right? Right. So we can have the derivative risk related policies. If there is any derivative risk, if there is any policy, the organization should clearly mention the policies here and the activities they are undertaking into that, right? If there is any reporting event, if there is any event reporting after the reporting date, so you can mention it here, right? This is a statement for the loan write-off, and that, if you remember, we have to show the loan. We have to give the name and detail of all those particulars of loan write-off 500,000 and above, So this is the format on which we have to show the bifurcation, right? So you have to show the name as well as the address of the borrower as well, right? And you have to show the amount of write-off from the bank, by the bank, right? Then we have to show the Islamic balance sheet separately. We have to show the asset, liabilities, and equity portion separately. We have to show the contingencies as well, and we have to show the profit and loss account of the Islamic, right? Then if there is any for Islamic, we have to show these bifurcations as well, right? Islamic diminishing, stasna, lam. Okay, and so we have to show the investment side as well. We have to show the ijara schedule as well, right? So this is something that is part of the conventional balance sheet, right? And all the banks are supposed to show this thing as well, right? So if there is a Muraba financing, just like advances, they have Muraba, ijara, Muraba. Okay, so they have their financing and they have deposits as well. So you have to show the composition of the deposit. You can see the deposit composition in the same, they are all same, right? You can see that you have to show the bifurcation into individuals, into government, into banking companies, into NBFIs and private sector as well, right? If there is a charity fund, so you have to show the charity fund as well. Then Islamic banking and profit, if there is a profit, so you have to show them in this format, right? Then we do have to show the contingencies of the banking as well, right? And the bifurcation is exactly the same that we have discussed in the conventional side. Guarantee, commitment, other contingent liabilities, you see. And then we have the P&L side, profit or return earned on the financing or investments. Then we have the expenses they have to pay on the deposits or profit they have to pay, and you have to show the notes as well, right? That's it. I was not expecting to complete it today, but alhamdulillah, we have done it. Now, as Firoz suggested, that we can take the questions in the next session. The next session is planned on Firoz. Can you tell me when is the next session? Is it on 27 or 31?
The next session is on 26th of October. That is on Wednesday.
Yeah,
2 days
tomorrow.
from now. Yeah.
Okay, so we can take these questions. We will be able to reply all of them for all the questions that they have raised. And that's it. Over to you, Firoz.
Thank you. Thank you so much. As Mr. Tai suggested that in the next session, we'll allocate some time for the participants to raise their questions regarding the accounting for financial services webinar. And if there are any questions, these will be answered in that time, and we'll ensure that we wrap up the management accounting part in the given time. So thank you so much, Saisa, for your time and for the knowledge that you
It was a lovely session. Thank you so much.
Thank you so much. So we'll be meeting day after tomorrow, that is Wednesday, 26th of October, and the topic that we'll be discussing would be management accounting for financial services. So until then, I would wish you all a good week ahead, and see you guys on Wednesday. Thank you, Tahir sir.
Thank you so much. Thank you so much. Thank you. Take care. Bye.